All right, let's kick things off with the basics. Imagine if every baby born in America got a little slice of Wall Street as a welcome gift. 1, 0 in a government-funded investment account. Sounds wild, right?
It's like a financial baby shower from Uncle Sam. Parents, employers, and even local charities can pitch in up to 5-0 a year. That money grows tax-free, giving kids a head start for college, a business, or a first home.
And here's the kicker. If the funds aren't used by age 31, the leftover cash gets taxed. So, it's a use it or lose it scenario with a pretty generous runway.
Exactly. Think of it as a mini 401k for newborns, but with training wheels and a government push. It aims to build lifelong financial habits from the literal cradle.
Now, let's shift gears. What's the big picture mission here? Why bother with all these baby accounts?
The mission is to jumpstart generational wealth. By giving every child a financial asset at birth, the government hopes to boost savings rates and reduce wealth inequality. It's about economic mobility from day one.
So, instead of waiting for kids to stumble into personal finance in their 20s, we're planting the seed early literally, before they can walk.
And the hope is that this early exposure translates to smarter financial decisions down the line. It's a proactive, not reactive approach to closing opportunity gaps.
Let's roll out the SWOT analysis, what's working for Trump accounts and what's not so rosy.
On the plus side, it promotes early saving habits and financial literacy. Everyone born in the U.S. gets access, so it's pretty democratic. But there's a catch: it adds complexity to the saving system and restricts how and when the money can be used.
Right, and it's not as tax-friendly as some existing options, like 529 plans or Roth IRAs. Plus, if only wealthier families make extra contributions, the rich kid advantage could grow.
And let's not forget, financial institutions might not love the extra admin, and the political winds could shift, putting the whole program at risk.
Transitioning from weaknesses, what doors does this program open and what pitfalls might be lurking?
It could spark a new wave of stock market participation and entrepreneurship. Imagine millions of young adults with startup capital. Employers and nonprofits might step in too, adding value beyond the family.
But the risk is, if only some families contribute, the wealth gap could actually widen. And with inflation gnawing away at savings, that 1-0 might buy a lot less by adulthood.
Plus, if the political pendulum swings, the accounts could face repeal, leaving families in limbo. It's a high-reward, high-risk social experiment.
Let's zoom in with the most framework: mission, objectives, strategy, tactics. What does that look like here?
The mission: build long-term financial security for future generations. Objectives include boosting savings rates and shrinking the wealth gap. The strategy? Seed those investment accounts at birth.
And on tactics: 1, 0 starter funds, annual caps, and strict withdrawal rules. It's like a recipe: just enough structure to guide outcomes, but flexible enough for families to season to taste.
Exactly, and by automating enrollment, the hope is nobody falls through the cracks. It's a blend of policy nudge and practical design.
Taking a broader view, how do politics, economics, and tech shape the future of Trump accounts? Let's crack open the Pestel analysis.
Politically, it's tricky. Bipartisan support is possible, but the Trump branding could make it a political football. Economically, it means a $3 billion annual investment, but with the potential for big ROI if kids use the funds wisely.
Socially, it promotes saving, but the poorest families might still struggle to add extra contributions. Technologically, fintech could make account management seamless, no more lost passwords or missing statements.
Legally, we'll need new IRS oversight and regulations for custodial accounts. Environmentally, it's neutral unless Wall Street suddenly starts planting trees for every baby bond.
Now, let's spearhead our analysis, pun intended. Who's at the table and what's the action plan?
Stakeholders run the gamut: kids, parents, government agencies, banks, employers. The core problem? Low savings and persistent wealth gaps. Evidence from baby bond pilots shows real promise for boosting long-term outcomes.
So, the action steps are clear: launch the accounts, automate signups, and keep the rules flexible. The big result? We could see a whole generation entering adulthood with real financial assets.
And with more market participation, we might finally see a shift in who benefits from economic growth. It's about democratizing investment, one crib at a time.
Let's sharpen the focus with a sharp framework. What stands in the way, and what tweaks could boost success?
The situation: rising living costs, shrinking birth rates, and gaping wealth gaps. Hindrances include a complex saving system and limited financial literacy. Some folks don't even know what a 529 is, let alone a Trump account.
Alternatives could be simpler universal accounts or direct cash like a one-time check instead of an investment fund. Recommendations? Simplify the rules, expand flexibility, and make sure the poorest families aren't left behind.
Projections show these accounts could grow to anywhere from 8K to 50K by age 18, depending on contributions and market luck. That's college tuition for some, or a business seed fund for others.
Zooming out, let's talk cause and effect. What actually happens if we roll out Trump accounts across the country?
First, every child starts life with a tangible asset. This could mean more Americans investing in the stock market and fewer stuck in generational poverty. It's like giving every kid a financial Swiss Army knife.
But there's administrative overhead. The IRS and banks would be swamped managing millions of new accounts. And if some families can't contribute, inequality might persist or even get worse.
It's a classic policy trade-off. Big upside, but not without risk. The challenge is ensuring the benefits don't just flow to those who already have a leg up.
So, big picture, are Trump accounts the game changer they're hyped up to be, or just another policy fad?
If executed well, they could genuinely shift the financial landscape. Imagine a generation that expects and plans for investment from birth. But the program's success hinges on smart policy tweaks and broad engagement.
And if we don't address the equity gaps, we might just be turbocharging the status quo. The devil's in the details, Sand, and whether politicians stick with it beyond the headlines.
Ultimately, it's a bold experiment. If we want a fairer, more financially savvy America, this could be a giant baby step in the right direction.